All right, it's Jared here from Crypto Plan. How's everyone going? And by special request, we're doing HEDERA HashGraph, the coin that BC Backer won't do analysis on because he's too focused on XRP, and that is fine because I want him to do that. I follow him for the XRP, so I'm going to have a look at a couple of those altcoins in the future that maybe some of the more popular chart analysts haven't got time to get to on their channels. All right, before we get into HEDERA HashGraph, or HBAR as it is on the ticker, please like the video, please subscribe to the video, and please share it because, that's what I'm trying to do. I'm just trying to get out some content, get some price predictions out there, give some people confidence in the things that they're investing in based on my analysis of the charts. This is not financial advice. These are predictions based on percentages, mathematics, and just in general kind of having a look at what the price action's doing on the chart with wicks and, the aggressiveness and the volatility and what the potentials are. All right, we can see the chart right here, and I just drew a little base there because from the March dip, because we like to measure from the March dip, we had kind of a real tight range, it popped out of there and probably got us a little bit excited around August. Like there was a lot of things that went up in August, but it pulled right back and just gave us those March opportunities again, which was rare. There's not many projects out there that in November of 2020 were giving you the price that was offered in March. Now, maybe that's because it was so depressed before March and it had a big run up and the pullback was just a little bit. But anyway, nice solid base, and so that's the reason why it's moved there. Now I'm probably, for a while there I thought I was late and I missed the boat, and I heard some people on Twitter talking about this, and I'm like, probably slept on it a little bit, down in and around here I probably coulda, shoulda, woulda got in, but didn't, and then it had ran, so I didn't chase, and I don't like chasing things. But I'm going to have a look at the chart now. I'm not invested in it. I'm not shilling this coin. I'm just giving you the chart analysis. I don't know where your price entry points are, and I know nothing about the project. I don't know what they're doing, why they're doing it. I just am going to look at the chart the way I do, without any fundamental bias or any kind of tribalism involved. So I hope you like it. All right, so since that base, we need to have a look at what sort of moves it's made. So on the daily chart, we've got some kind of clear kind of moves and retracements. So I guess if we ignore that, because that was kind of a fake out and a back test, and just talk about maybe the move from this base here, the bottom of this base here, up to there, or potentially up to there. So we'll do a couple of kind of stage analyses. And I can already see that it's probably only in its second stage of a pump, and if people that have been watching my channel talk about 4-stage pumps, or at least 3 stages of a pump, the fourth one being that parabolic top, or that, that blow off top, if it happens, but it's not guaranteed, so different cryptos behave differently. So we'll base this on the idea that maybe there is 3 moves and potentially a 4th. So I'm going to go over and grab my trend angle tool and just start from here and pull it up there. And just see where that gets us based on that retracement. So it gets us up about there. So potentially, it's overshot that mark, which is fine. So then if we kind of call that move happened, then we can now measure this particular move. So there we go. So looking at that there, we could kind of say that there was a move, a pullback, a breakout, a back test of that high, and then a move again, right? So this little zone here is a consolidation with a bit of a price discovery and then a pullback. So all in all, it's a consolidation. So we can say that confidently that this is leg 2 complete. So we're in the leg 2 accumulation. And that leg 2 accumulation, if we're talking about, comparing to other projects, is 28 days in. So there's a potential that, we've still got some more time. So let's put on 45 days there, which is kind of a rough ballpark figure of how long consolidations are taking. I'm not saying it will take that long for it to break out, but it could take that long. So I'm just going to move those angles again. So we've got two moves there. So now if we were going to say that, I'm going to pull that down a bit. So if we're going to say that it's reached all-time high, attempted another breakout of all-time high, pulled back, didn't have the steam, given us a double bottom, so it's tested the bottom. So it's telling us there's a range now. So we need to, I guess, confirm that range by drawing in our triangle, right? So, all right, yeah. So there we go. We've got our kind of stage analysis there. We've done two legs. We're in an accumulation. We've drawn our little kind of breakout triangle that's got the two kind of tests on the upside, two tests on the bottom. So we found a bottom, we found a top we need a breakout of. So we're expecting a bit of sideways, 45 days. I guess if it ground all the way to the edge of the triangle, could be, 50 days, which is another 24 days. So, nearly a month potentially to go for it to go sideways. But the beautiful thing is that once it breaks out of there, we can potentially see a decent move. So let's say if we were only going to do three legs, and we're going to call that the bottom, we're looking at a upper target there of 122, or a take profit zone of 122. Maybe just kind of be a little bit more conservative there and beat the other chart analysts and go somewhere around $1.17. So that one would get you a nice little return on investment from today's prices of 240x. Now, there's there's the idea that it just does three, and I guess that's fairly conservative, fairly short-term trade. But we could also see that this could potentially be one entire move. So let's just have a look at it from that perspective and see what we get. So let's, what do we want again? We want our trend angle, and going from down here in our range all the way up the top there will be kind of top of wicks style, and then something around there. So that would be our kind of extra bullish, possibly end of the bull run target, or maybe more than that, but based on it doubling, doing this similar move again, that's what we're looking at. So in that sense, we would be looking at, from today's prices, a nice tidy profit of a 10x. So that's not bad. That's probably consistent with the rest of the market at the moment, that there's about a 10x move based on, kind of conservative or, full reaches out of Fibonacci extensions. And the beautiful thing is that if you were in it nice and early, even at the top of this base here, you're looking at taking away your 94 times your money, which is a nice return on investment. So depending on where you're at, you're going to get a 10 to 50 to 100x maybe on your profit, on your initial investments, which is great. I guess one last kind of target, because that this trend analysis or the stage analysis is one method we can use. But let's just say if we did our Fibonacci, trend-based Fibonacci, so from here all the way up to the wick and then pulled back, then we've got a new target somewhere in there, so a $2 target. So it's a couple of take profit zones, to beat the band. And then I guess we could also just kind of see if our $1.17 mark is real by giving us, so if we pulled that fib on it, there's probably a lower level there for a take profit based on that retracement. And then potentially we could see, based on the whole entire move and what it's done so far, based on that, that kind of gets us up in the 185. So there's a couple of, a splattering of targets there, anywhere from $1.05 all the way up to $4.02. And you've got to choose your weapon and you've got to choose where you want to get out. I guess if you're trying to hold your entire bag up to this $4 range, that's slightly riskier. It could be the tippy top of the market and hard to scale your entire position out. So you may want to be kind of picking some of these targets as take profits or zones where you reassess what you're going to be doing with HBAR, HEDERA hash graph. So there we go. That's about all I can do by looking at the chart solely. We've got, a week, anywhere between a 10 days and a 20 days of consolidation, I believe. I cannot see any crazy volume action going on that says that we're ready to break to the upside. I think we're playing out an accumulation, and that's fine, like a lot of other things are. So, just buying the dips right now if you're not in, and accumulating on the dips if you still want to keep being a buyer. You can see clearly that 29 cents is the dip zone. And, I guess if you want to average out this move, buying even from 33 downwards is still a decent price, with very, well, not completely no downside risk, but for this move, it's a limited downside risk, and you can always buy a little bit more in on any other dips. So HBAR, there we go. That's the chart analysis. That's what I'm seeing. I've been Jared. This has been Crypto Plan, and I hope you stay profitable and do your thing. Bye now.